Let's put the spotlight on Indraprastha Gas Limited. That counter has reported its numbers for the fourth quarter. Volumes have seen a big uptake, but remember, EBITDA has declined on account of some gas constraints that we saw in the quarter gone by. Mr. Kamal Kishore Chatiwal, MD of the company, is now joining us. Thank you for taking your time out. We have EBITDA, which has declined by about 10% on a sequential basis, largely led by higher gas prices. If you can take us through what led to the increase in raw material costs in the fourth quarter and also the higher employee costs that you registered in the fourth quarter.
The EBITDA has dropped by 10%, and a major reason has been the gas cost, not the employee cost. The employee cost, we have kept a provision for the labor costs that were notified. So there is a provision of around 29 crores in that. So that's the reason for the employee increase, what we are seeing. So the provision is there, as now the notifications have come on May 8th. So we are working on that. So whatever would be there would take us. So that is the impact. But the major reason for the drop off in EBITDA has been the gas cost in the fourth quarter, especially in the month of March.
Mr. Chatiwal, also the higher raw material costs that we believe is due to the higher gas costs led by the West Asia crisis. How much has the gas cost increased by, and how much of the raw material increase has been passed on so far?
You see, if we compare to pre-war situation, there has been a close to 25% increase in the input gas cost as far as the CNG and commercial segment is concerned. So that has been the kind of increase. Industrial, we have been able to pass on to the consumer. But here, partially we have passed on to the consumer in the form of price hike of 3 rupees that we have taken till now.
Mr. Chatiwal, since we are talking about price hike of 3 rupees per kg in CNG that you have already implemented, will this price hike completely offset the impact of rising gas costs and INR depreciation, or will more price hikes be actually needed to compensate the impact of rise in raw material costs that we have seen?
No, actually, we have not hiked prices in domestic PNG segment. The hike you are talking was in earlier period. So right now the increase has only been in the CNG segment, and due to the PNG drive that is there, National PNG Drive 2.0 that is going on. So we have taken a conscious call to push that to hold the price hike, just to push the numbers and make it more attractive. And we are keeping a watch on the situation, and in case the situation normalizes, so we will be able to withstand based on the balance sheet strength.
Right. And how much could the margins be impacted by the first half FY27 as a consequence of the raw material price increase not being passed on?
No, our guidance for the full year remains that EBITDA margin of 7 to 8 rupees. That's the kind of range that we are looking at. And whatever is needed, be it on the sourcing front or other measures, so that we'll be taking. Right now, one good thing has happened is that the Henry Hub has been relatively stable, and 2/3 of our contracts are linked to Henry Hub. And now the supplies are getting normalized in the sense that when the war started, there was a force majeure kind of condition, and the supplies were getting restricted to 65%, 60 to 65%. Now they are getting normalized. And our 2/3 sourcing is in Henry Hub linked contracts. There we see the price stable in the range of $2.6 to $3 per MMBTU. The major impact has been on the crude link, especially the new well gas, which is linked to 12% of APM. So there we are seeing a major impact of increase to the tune of 50%.
Right, so that's as far as impact on margins are concerned. But let's also talk about volume growth. And Mr. Chatiwal, volume growth in fourth quarter was very strong at about 3% on a sequential basis. But despite curtailment to industrial segment due to gas shortage led by West Asia crisis, industrial and commercial volumes grew 3% sequentially. How much volume growth should we factor in for FY27 for industrial and commercial segment?
You see, for the entire volume, we closed the quarter at 9.69 MMSCMD, and our guidance for the next year, fourth quarter, would be 10.6 MMSCMD. Now, we are seeing a very strong demand from industrial, commercial, and domestic segment. So these three segments, we believe, will continue to grow in excess of 15 to 20%, especially the commercial and domestic segment. So they will be growing in excess of 20% in the next 2 to 3 years. That's our estimation as of now, because there has been a huge unprecedented support from the government in the form of control orders. Whatever permissions were needed, they are getting. All the state governments are also cooperating, and we are getting all permissions in the shortest possible time, as well as the LPG sunset, which the industry has been wanting, the whole CGD industry has been wanting. So there has been some developments on those fronts also. So with the kind of support, we believe that the entire sector is going to grow, the domestic PNG and commercial segment. So there, the growth would be in excess of 20%.
Right. Mr. Chatiwal, more than 20% of the volume growth of industrial, commercial and domestic segment, that's all a positive. But when we talk about the domestic PNG volumes growth, it has been the highest on a year-on-year basis growth in the past 5 quarters. This was partly, we believe, because of the LNG shortage and increased reliance on the PNG supplies. Now, with West Asia conflict-led gas supply being a concern, could the PNG growth accelerate further in FY27?
You see, what we are seeing is what I gave the guidance was for the next 2 to 3 years. But this year, definitely the growth would be around 40%. So we were doing 2.5 lakh, and this year we see 3.5 lakh. So 1 lakh additional. So that's the kind of growth numbers they will be coming. And maybe going forward, if some more measures are taken, so we see that the conversion numbers, because the advantage with IGL is that we have the network laid. In many cases, even the end consumers have been connected. It was only the reluctance on the part of consumers to convert from LPG to CNG, LPG to PNG. So there we are seeing that now the consumers are getting confidence on PNG, and the requests are coming for conversions. So that's a very positive thing for the PNG segment.
So understood. So that's as far as volumes are concerned, and the outlook clearly is very positive. But Mr. Chatiwal, also wanted your thoughts on the Capex plans. Any new geographical areas that the company is now looking at to expand into in FY27?
You see, we have already given our acceptance for Gurugram and Faridabad. So these will be the 2 new areas that we have. In addition to that, the outside Delhi, NCR geographical areas, now there the growth has been very, very strong, especially in, say, Rajasthan, Ajmer, Pali districts. So there we are growing in excess of 40-50%, although the base is now substantial, now that 1.5 lakh, 1.47 was the sales. So that is growing at 40-45%. Also, the other GAs are also in excess of 15-20%. So there, these 2 GAs, Gurugram, Faridabad, as well as the outside GAs, so they should propel the growth to in excess of 10%, we believe.
Right. On that note, thank you, sir. Thank you for taking the time out and joining us. We'll let you go on that note.